You too can improve your credit score, and I'm here to show you how. Welcome to my channel, Fit with Tiff 100. The steps I took to lose 130 pounds. 3 secrets that I use to pay off $100,000 in student loan debt. This topic is definitely near and dear to my heart. Out here on the field at the Texans game. How amazing is that? What's up, my Fit fam? Thanks again for tuning in to another segment of Fit with Tiff 100. Tiffany Chanell here, and as the CEO and founder of Money Makeover Ministries, I have helped so many of my clients improve their finances, their career, their education path, and I would like to share with you some of the tips that I share with my clients when improving their credit score. Also, you'll find on moneymakeoverministries.com a free guide to improving your finances. So guys, this is a very much requested video. I can't tell you how many friends and family members and just people that I meet say, hey, how did you get your credit score so high? And how do I make my credit score increase? And so I'm hoping that you are watching this video because this is going to help you improve your credit score. So stay tuned. So there are various factors that impact your credit score. You can sign up for free at creditkarma.com or creditsesame.com. There's quite a few credit score sites, and this is not a paid advertisement type of video, but this is just information that may help you. And on those sites, you will see where you fall on each of the different factors that do impact your credit report. And as you can see on the screen here, these are the various factors. You can see credit utilization, you can see derogatory points, credit history. Some of those things highly impact your credit report. And so I'd like to share with you today different tips and techniques to help you more quickly improve your credit score by addressing some of those high impact areas. Now, before I share that with you, let me just say that I've also used these techniques on myself. Very quickly, my credit score started off around in the 700s, the low 700s to the mid 700s. And when I went through my divorce, I noticed that I had to use my credit card more often than I wanted to because legal fees are not cheap, and constantly getting into debt and calling different bill collectors and working with them to not impact my credit report. Fortunately for me, I was able to work with the different bill collectors and not have my bills negatively impact my credit report. But when it came to credit utilization, I did have a high utilization ratio. And that negatively impacted me so much, in fact, that my credit score dropped to the mid 600s. I was around 660. And then once the divorce was finalized and I began paying off my credit card debt, in another video I talk about how I paid off a lot of my debt, including student loans and credit card debt, and I'll try to link this here. But my point is that when I paid off my credit card debt, I saw my credit score start to go back up into the 700s. And then as I begin paying off other debt that's on my report, like student loans, paying down my mortgage, then I begin to see my credit score rise, and I'm now in the 820s. I believe I'm at the latest score that I pulled was 821. And so that's how I improve my score. I've worked with clients where we've improved their scores by 300 points in less than 3 months, and it is possible. So stay tuned so you know how to improve your score too. So I would like to share with you 5 different keys plus a bonus, because you know I love giving bonuses at the end. I'd like to share with you 5 different keys or tips to helping you improve your credit score more quickly. So tip number 1 is called piggybacking or authorized user. And what this means is you would add yourself as an authorized user to someone else's credit card. And you want to make sure that that person has 3 different things going well for them or on that credit card, or you don't want to add yourself, because then you defeat the whole purpose of improving your credit score. The first thing that you want to make sure is that their credit history is long. And so it's important that their credit history is at least 5 years or more. So it shows a long-standing credit history of paying their bills on time. In addition to that, the second thing that you want to make sure is that they have a high credit limit. And so the higher the credit limit, the better it looks, because it shows that someone is trusting you with a large amount of money to borrow. And then the third thing that you want to make sure, and this is an important one, is that their credit utilization is low, meaning that the balance on their card is much lower than the credit limit. And I'll talk a little bit more about credit utilization later on in this video. Now, in case you're wondering, will adding yourself to someone else's credit card, of course it has to be with their permission, because they'll be the ones that call the credit card company to get you added. And in case you're wondering, or they're wondering, will this negatively impact their credit score? No, it will not. It will not negatively impact their score to add you as an authorized user. It will only work for your benefit and positively impact your credit score as long as those 3 things that I just laid out and mentioned are in fact there. Now, I would suggest piggybacking before I would recommend co-signing. As a matter of fact, I'm completely against co-signing. I don't care if it's your boyfriend, your girlfriend, your children, your parent. I don't care who it is. I am totally against co-signing, because co-signing can negatively impact both people if one person does not make their payment. If you're co-signing for someone to have a vehicle and they stop making the payments, then it's on you to make the payments on the vehicle that you co-signed for. And so that's just not a good idea. But piggybacking allows the benefit of that person who became an authorized user to actually positively impact the authorized user's credit score without negatively impacting the primary user's credit score. Now, the second key that I would like to share with you is having a long credit history. So I mentioned a few things that are important when you are piggybacking, and one of them was credit history length. And so I am not big on debt or credit card debt, but if you are looking at your current credit cards and you're determining that you probably want to cancel some of them, consider keeping the ones that have the longest credit history, about 5 years or more. So I do mention that on one of the videos that I made regarding the keys that millionaires use in staying out of debt. And so definitely check out that video, because I go into more depth of talking about credit cards and determining whether or not to cancel certain ones, etc. but definitely you want to make sure that the card that you keep is the card with the longest credit history. So the third tip is regarding your debt to income ratio, or in other words, your cash flow. And so what this means is this is the amount of cash that you have available to you after you take your income minus all of your expenses or your debt. You want to make sure that your cash flow is high, which means that your debt to income ratio is low. The rule of thumb is to keep your debt to income ratio lower than 36%. So 36% or lower. Most lending companies will not do business with you if it's greater than 43%. So again, keep your debt to income ratio low. Tip number 4 is your credit utilization ratio. So you want to make sure that your credit utilization ratio is low. So in case you're wondering, what exactly is credit utilization? This represents the money that you use, which is your balance, over the money that you have available to you to use, which is your credit limit. And you want to make sure that that ratio is below 30%. Now, I recommend to my clients keeping it below 20%, because if you recommend 20% and you kind of get a little bit above, let's say, for an example, I have a gas card that I use every week, and I'll use that gas card, and at the end of the month, I pay it off. But by paying it off at the end of the month, then I make sure that my credit utilization ratio is low. However, I notice that as that money is accumulating that I'm using on that card each week, that my credit utilization ratio is getting a little bit higher and higher each time, of course, I use the card, because my balance is getting higher. And so if you're not careful, you can easily creep above the 30%. But if you aim slightly lower, and I recommend 20%, then you'll never creep above that 30% ratio. So tip number 5, do not run from the bill collectors. And I know some of us probably have had to do that one time or another, but don't run from them. Actually give them a call and try to work out a payment arrangement with them so that you can ensure that you remove any derogatory marks from your credit report. Because as you noticed on the chart that I displayed at the beginning of this video, derogatory marks will count against you on your credit report, and the credit bureaus definitely take those very seriously. And so if you have any marks like that against your credit report, you want to call those collection agencies and work with them. I have done this before in the past, and some agencies will work with you because they have no other choice, right? If you don't pay them, they don't get their money. And so these collection agencies have basically collected your account from the company that you originally received your credit account from, and they've paid that company X amount of dollars. And so now they want to reap some sort of benefit from purchasing that account from the company. And so if they don't work with you, they don't get anything and they lose out. So work with them, come up with an amount that you both agree is reasonable, something that you can pay. I would not advise you to pay the full amount. And obviously, if you haven't paid on this account, maybe you didn't have the money to. Let's say the account is a $2,000 account and you just didn't have it. But maybe you have $600. Maybe you recently received a bonus from your company, or your income tax return came. And so when those type of things happen, then take the money that you have, let's say $600, work out a deal with them. Let them know, hey, I can afford to pay you anywhere between $400 to $600. I can't go over $600. I have nothing other than that. and they'll work with you. And so at least most companies, from my experience, will work with you. And so that's one way that you can help improve your credit score. Now, please keep in mind that some credit accounts will drop off your report in a few years. So let's say you had a credit account that's been on your report for about 7 years and you have not paid on it for that length of time. According to the Fair Credit Reporting Act, it is required for that debt to drop off of your credit report after 7 years. So, with that said, if it's around 7 years, allow it to drop off if you just can't afford to pay. But if you do have a little extra income, give the credit agency or the collection agency a call, work out a deal with them so that you can remove any derogatory marks from your credit report. Now, guys, here's the bonus that you've all been waiting for. Pay your bills on time. Now, I know you're probably thinking, Tiffany, how is that a bonus? It is a bonus. I don't think everyone realizes that after 30 days of being late on any of your bills, that will impact your credit report. It will go on your credit report. And that's why I was telling you earlier in this video, when I was going through my divorce and trying to figure out the bill situation, I was working with the bill companies to make sure that nothing was going to go on my credit report and could they work out a payment plan with me. You'd be surprised. There are some companies that will in fact work out a payment plan with you. And by doing that, I didn't have any of my bills negatively impact my credit report because I was able to work out a payment plan with them and then eventually continue paying my bills on time. So again, my Fit Fam, there are various factors that impact your credit report and your credit score, and these are some of the quick wins that would help you increase your credit score in a shorter amount of time. Now, please don't be a stranger. Feel free to follow me at FitWithTiff100 on Instagram as well as on Facebook. And I hope that you enjoyed this video and it helps you and others that you know in some sort of way. And please feel free to like, comment, share, and subscribe to my channel if you do enjoy this type of content. Always remember to stay fit in your finances, and I will see you in the next upload. Thanks, my Fit Fam. Bye.